Hello, I'm Sally Baudet. Welcome to Global Business Europe. Our top stories. China's AI company Minimax sees its share price jump in Hong Kong after stock becomes available to mainland investors. The price of gold hits its highest level since June as a deal is proposed to reopen the Strait of Hormuz. And once upon a time, they were known as girls' best friend. But are diamonds now losing their sparkle? Now, shares of Chinese AI company Minimax surged on Thursday after the stock was included in Hong Kong's Stock Connect scheme, opening access to millions of potential investors from the Chinese mainland. The stock briefly jumped more than 22% before closing just over 17% higher. Meanwhile, leading robotics company Unitree has started the pricing process for its IPO in Shanghai. Coming in at around $21 a share, it suggests a relatively high valuation for the robotics company. Unitree is expected to reach a market capitalization of about $8.3 billion after listing. AI firm DeepSeek has warned of a significant increase in fees for its AI services. DeepSeek's current annual recurring revenue is estimated between $400 and $500 million. The company is reportedly targeting a new funding round of nearly $7 billion. Well, I asked Zhang Jiwei, President and Chief Economist at Pinpoint Asset Management, if this is the moment that China's AI story shifts from technology to the capital market.
This is a quite exciting moment. We've seen, interesting new companies with strong AI themes getting listed. So I think, it is a new era, and AI will get a lot of attention in the market.
It's very interesting if we look specifically at robotics. Over half of the money that Unitree hopes to raise with its Shanghai listing is earmarked for research and development. So do you think potential investors are buying into the potential rather than the bottom line of these companies?
The sort of feedback I got from investors, both domestic and international investors in the past few years, a lot of interest in this area. And I've seen global investors coming to China. In the past, they would go to Beijing and Shanghai. Nowadays, they would want to go to places like Hangzhou and Shenzhen, where this kind of robotic or AI-related companies are based. So I think there's a very strong interest, and these companies are also global leaders.
UB Tech listed in Hong Kong in 2023. That was the first humanoid robot company to go public, as far as I understand. But Unitree's talking about embodied AI. That sounds like next level stuff. Just talk us through that.
This concept essentially is combining robotics and AI, that you can make basically robotics that trained on the, not just in the factory. You see these robotic dogs that run on all kinds of surfaces and collect data in this process, and utilize models to algorithms to optimize the way that these robotics should move. It is a very different, another stage of robotics.
You mentioned DeepSeek, and we have just heard that this Chinese large language model is going to start charging sharply more, which I suppose is pretty similar to what a lot of the US large language models are doing. That's an alternative way to raise money, I guess. What do you make of that decision by DeepSeek?
It's true that the original pricing was probably too low for them to make the business model viable in the longer term, right? So, and in terms of performance, the performance is already very good. So they have this pricing power that they can lift price and make their business model more sustainable. And we'll find out. But I think this is probably a good idea for a lot of these other players in the market, not just the American players, but also Chinese players in the market. Because if you put the price too low, essentially you just squeeze everybody out and nobody can make money, and this is not good for the development of this industry. We do have this concept of anti-involution that is very much promoted by the government, and low price is not always a good thing.
That's Jiang Jiwei of Pinpoint Asset Management. Over 900 million SpaceX shares have unlocked, giving early investors their first chance to cash out since the company's IPO 8 weeks ago. The rocket maker's stock price today of around $110 is about half of its mid-June high. Let's bring in our correspondent Mitch McCann, who is in New York. Hello, Mitch. So how are SpaceX shares doing?
Yeah, hi Sally. Look, it's been a turbulent run so far for SpaceX since it listed in June. When that stock opened to the public on the 12th of June, it was selling to everyday investors at $150 a share. It briefly popped up to $200 a couple of days later, but since then it has continued to fall rather rapidly. Right now, a couple of moments before coming on air, it was trading at $109, so significantly less. And there will be a few considerations among those early investors when they decide whether or not they're going to unload their stock or keep it in the hope it's going to go back up. And one of those is the business's first earnings report we talked about earlier this week. It came out on Tuesday, and it showed that SpaceX's second quarter revenue was up to $7.8 billion, up 92% from the same period last year. But investors may be concerned, and we've seen this with a number of these tech companies, about the capital expenditure they're spending on AI and infrastructure. One point of interest today is that it was very possible that SpaceX stock would start falling for the fact that many of these early investors were expected to sell and flood the market, pushing the price down. But that isn't really what we've seen so far. In fact, a couple of moments ago, SpaceX stock was still up about 0.74%. But the caveat to that is that earlier today it was up about 3%. So it has been falling throughout the day. So it's going to be interesting the next 4 or so hours of trading. It's possible some of this may have already been priced in, or the early investors are holding on to their stock. But I think a lot more to come on this story in the next couple of hours before the close.
So we've heard some positive noises from Iran and Oman that they've worked out a deal for how to open up the Strait of Hormuz. Of course, the United States is not involved in that. We wait to hear exactly what they say about this. In the meantime, the markets are looking interesting. Gold price sharply up, oil up a little bit. What do you make of how the markets are reacting?
I think at the moment for investors it's a bit of a wait-and-see mode. We remember Scott Bessent talked about this, or the possibility of a deal on Tuesday or Wednesday. We heard Donald Trump talk about a deal possible on Wednesday. But it has to be said, we have heard this many, many times since April. So I think some investors will have some scepticism around whether or not a deal's actually going to happen because they've heard it so many times before. And so it's going to be interesting here. This morning the markets are relatively flat. As I said, bit of wait-and-see. The Dow Jones was down a short time ago, 0.6%, the S&P 500 down 0.3%, and the Nasdaq down 0.2%. So I think a lot is going to depend on what happens if we have any announcement from the White House this afternoon, or Iran and Oman, who have been negotiating the Strait of Hormuz. Another point of interest as it relates to the markets today is unemployment benefits, or claims for unemployment benefits. They rose to 199,000 for the week ending August 1st. Analysts had forecast slightly more, but the figure is relatively on track with what was expected. So I think both SpaceX and the broader markets, there's going to be a lot of change perhaps in the coming hours because there are a lot of dependent factors.
Absolutely. Thank you so much, Mitch McCann in New York. China has launched an investigation into products sold in the country by US cybersecurity and cloud computing provider Palo Alto Networks. Beijing cited risk to critical information infrastructure and national security. Now, the move comes amid growing trade and technology tension between China and the United States. Nintendo's net profits surged more than 53% in the 3 months to June, hitting almost $1 billion. It was boosted by strong demand for the Switch 2 console and the global success of the Super Mario movie. But the gaming company says US tariffs and rising memory chip prices weighed on overall results. First it was OpenAI, then Anthropic, now Meta's artificial intelligence has also gone rogue. The company announced that during testing, one of its AI models connected to the internet and hacked into another organization's systems. Now, these breaches are raising cybersecurity concerns and prompting calls for more safeguards to be in place. But despite the challenges, there is no doubt that artificial intelligence is transforming the world as we know it. Cambodia wants to partner with China to help prepare its young workforce for the new economy. Our correspondent Sri Marianop has more.
Tasks that once took hours can now be completed in seconds. For Cambodia's young workforce, artificial intelligence could open new possibilities, but only for those who prepare to use it.
AI has been very helpful in my studies, especially in improving productivity and generating fresh ideas. I believe students also need to learn how to write effective prompts so they can get the best possible results from AI tools.
Prime Minister Hun Manet says Cambodia must reduce its skill gap as AI reshapes industry and the global economy. He has identified human capital as a key part of the country's future competitiveness.
AI is both the present and the future. If we fail to recognize its importance, prepare ourselves, and seize the opportunities now, we will fall behind others.
Cambodia is seeking closer cooperation with China, a major force in artificial intelligence and digital technology. The question is how this experience can be applied to Cambodia's own development priorities. Cambodia has joined more than 24 countries in establishing the World Artificial Intelligence Cooperation Organization. Based in Shanghai, the organization provides a platform for countries to share expertise and strengthen their ability to develop and use AI.
What we see in terms of talent gap is that the lack of that technical AI expertise. So we cannot deny that AI is a disruptive force, and therefore we need to rethink the way we teach. We need to sort of make sure that our young generation can learn up-to-date skill that the future workforce would require.
In practice, the cooperation could support research partnerships, professional training, and improved access to digital systems. The next step is turning those commitments into programs that produce measurable results. AI could increase demand for skills in software, cybersecurity, data analysis, and digital services. But access to technology is only one part of preparing the workforce. Long-term progress will also depend on local expertise, wider access to education, and Cambodia's ability to adapt new tools to its own economic and social needs. Cooperation with China could accelerate Cambodia's digital transition. The real test will be whether it equips Cambodian for the job and industry emerging along AI. Sri Marianop, CGTN, Phnom Penh.
This is Global Business Europe. Still ahead, once upon a time they were known as girls' best friend. But are diamonds now losing their sparkle?
Ever wondered what's the difference between a bear and a bull market? Where are the cash cows? And who are the lame ducks? And what exactly are black swans? Grey rhinos? And unicorn companies? Make sense of it all with Global Business, only on CGTN.
I think it should be more global.
I would like to hear more the voice of the developing countries.
Globalization has lifted more than 1 billion people out of poverty.
The green transition has to happen. It's a necessity.
Well, China and the United States are important powers in the world.
What unites us is much more than what divides us. And I believe China is committed to this agenda.
Join me, Juliet Mann, to set the agenda at these times every weekend on CGTN.
Welcome back to Global Business Europe with Sally Burdett. Your headlines. China's AI company Minimax sees its share price jump in Hong Kong after stock opens to mainland investors. The price of gold hits its highest level since June as a deal is proposed to reopen the Strait of Hormuz. Europe's record-breaking heat waves have drained its rivers. The water levels of the Rhine in Germany have plummeted, threatening cargo shipping, while historic lows on the Danube have stranded cruise ships and damaged the tourism industry. Our correspondent Pablo Gutierrez reports.
Samuel Como has spent his life on the Danube. Today, the captain of the Thetis guides us past Hungary's parliament, along a river he knows better than most. But this summer, he says, he is navigating in unfamiliar waters.
In this year, there was very few rain. And not only in Hungary it was not raining because it doesn't matter, but in Austria, Germany, the Czech Republic, so all the places from where the Danube collects the water and brings here.
The Danube stretches nearly 2,900 kilometers from Germany's Black Forest to the Black Sea. Months of drought have left large sections too shallow for many vessels. Near Gellerhill in Budapest, Samuel points to a landmark that locals have feared for centuries, the Hunger Rock. It rises only when the river falls to extreme levels.
So when the rock comes out from the water, then the hunger comes, because then it's very little water in the Danube and also very little water on the fields.
The warning reaches far beyond Budapest. International cruise ships that normally sail through the Danube now sit tight to the docks. Passengers finish parts of their journey by bus. 70 kilometers north of Budapest, in Esztergom, 2 international cruise ships remain docked.
River cruises bring around 600,000 visitors to Budapest and Hungary each year. With bookings down, towns that rely on these type of tourists will suffer and could lose millions of dollars.
Upstream in Moche, Slovakia, people now walk where ships once passed. Among them is Esther, visiting from Vienna.
We don't see the boats, the cruise ships here, so it's sad.
Commercial cargo vessels also wait for the river level to rise. And for those who work on the river, fewer boats mean fewer customers. Janos has operated a ferry and a floating restaurant for 26 years near Lupa Island in Hungary. He says the river has become difficult to navigate.
You need to be very cautious. The river is full of reefs. If you don't know exactly where to go, you will run aground and destroy your boat.
Back in Budapest, Samuel watches the depth meter. Near the Hungarian parliament, it reads just 0.7, when it should be more than 7 meters. Until the waters rise again, he can go no further. Pablo Gutierrez, CGTN, along the Danube River in Hungary.
In other news, EasyJet shares jumped over 3% on the news that US-based Apollo Global Management is going to buy the British budget airline. US private equity firm Castlelake walked away from its plan to purchase EasyJet last month. But now, rival Apollo Global has stepped in with an offer of $7.7 billion. The sale is expected to be completed in the first quarter of next year. China has unveiled the world's most powerful offshore wind turbine. It's designed to withstand super typhoons with wind speeds around 200 kilometers an hour. The floating structure makes it possible to move the turbines far out to sea, which is where 80% of the best wind resources are found. A quicker shipping route for Chinese electric vehicles destined for Europe has opened. Stretching from China's Zhejiang province to Italy and Spain, transit time will be cut to around 20 days. Zhejiang is emerging as a major export hub for Chinese EVs. Shipments from Ningbo port have surged 275% in the first half of this year. China has built its reputation on affordable electric cars, but now they're targeting the luxury market. High-end, chauffeur-driven vehicles known as MVPs. Dai Kai reports from Shenzhen.
For years, the Toyota Alphard and Lexus LM have dominated Asia's chauffeur-driven MPV market. Chinese automakers now believe intelligent EVs are giving them a chance to rewrite the rules.
We call it the flagship of the era, one model per generation, leading the industrial chain to drive China's automotive industry.
Huawei-backed Maestro has launched its first million-yuan multi-purpose vehicle V800, the first ultra-luxury MPV priced in the million-yuan segment. The launch marks another step in China's push towards manufacturing higher-end vehicles as domestic brands look beyond affordability and compete on technology, comfort, and brand value. The trend has been building for some time. At this year's Beijing Auto Show, brands including Zeekr, GAC, and Huawei-backed Stelato unveiled premium MPVs, mostly priced between 300,000 and 600,000 yuan. The Maestro V800 goes a step further, targeting buyers traditionally drawn to imported executive models. The move signals that Chinese automakers are now trying to complete their product portfolios, from compact city EVs and family SUVs to executive sedans, off-road vehicles, and chauffeur-driven MPVs. Domestic brands are entering nearly every major segment of the market. The shift is backed by one of the world's most complete EV supply chains. Here in the Greater Bay Area, vehicle manufacturers work alongside battery makers, autonomous driving developers, LiDAR suppliers, and automotive electronics companies, allowing new technologies to move from R&D into production much faster. But building a premium brand requires far more than technology, and how automakers earn long-term consumer trust remains the bigger challenge. 戴凯 CGTN 深圳广东 Province.
Diamonds are forever. That's the iconic slogan of the most famous diamond company in history, De Beers. But that doesn't seem to be true anymore. Owners, Anglo-American, are discussing a cut-price $1 billion deal to sell off the company in a changing industry. Here's our correspondent Siobhan McCall with all the sparkling details.
Hi, Sally. Yes, De Beers once had a near monopoly on the global diamond industry, controlling up to 90% of rough diamond supply in the early 20th century. But with the emergence of new diamond producers, De Beers' share has dropped to around 25%. It also has less control over prices, and its value has fallen dramatically. In 2001, the company was valued at more than $18 billion. A decade later, Anglo-American bought up an additional stake, and the transaction valued De Beers at around $13 billion. Now, it's set to sell its 85% stake in De Beers for just $1 billion. As well as having less market power, changing consumer habits have hit demand, particularly in China. Arguably, though, the biggest disruptor is the emergence of lab-grown diamonds. These are significantly cheaper. Earth-mined diamonds have an average retail price of between $4,000 and $6,000 for a 1-carat stone. But lab-grown ones average between $800 and $1,500. So how do they compare? Rahul Pathak reports.
To the naked eye, it's almost impossible to tell the difference, because there is no difference, apart from the way they are manufactured. These are synthetic diamonds, grown in and produced in a lab, and for a fraction of the cost of their naturally mined counterparts. Chemically, physically and optically identical to traditional diamonds, but unlike traditional diamonds, these lab-grown precious stones take just 6 to 8 weeks to create. Modern technology has allowed diamond manufacturers to mimic the natural formation process, meaning they can produce these synthetic gems at a much cheaper cost and at a higher volume. China is the world's biggest manufacturer, producing over 70% of the world's lab-grown stones. In 2025, this factory in Zhucheng produced the world's largest lab-grown single-crystal rough diamond, weighing in at 156.47 carats. Global sales of synthetic diamonds have risen steadily since the 2010s. From $12.1 billion in 2025, it's projected to grow to $16.3 billion by 2033. The increasing affordability and quality of these diamonds has seen prices drop across the industry. The natural diamond industry will need to adapt to this new challenge or run the risk of becoming obsolete. Rahul Pathak, CGTN.
Well, let's get more on this. Paul Zimnisky is an independent diamond analyst and consultant. Paul, thanks for joining us. We're just hearing there that lab-grown diamonds are no different apart from how they're manufactured. So why would people still buy the earth-mined ones?
Yeah, I guess I would just note to start, it's been an extremely volatile period for the diamond industry over the last 5 years. We went from record demand as recently as 2022 to this, generational route that we're going through now. And I think the key is to understand that there's been a series of forces at play all at once. Like you said, it's the mainstream introduction of cheap man-made diamonds that certainly diluted the market. But there's also been a considerable fall-off in demand for diamonds in China. China's been the second largest consumer of diamonds for 2 decades. Then we have industry marketing has been on the decline since the Western sanctions were imposed on Russia. Russia's one of the largest producers of diamonds, so they were a big contributor to marketing. And then we had the tariffs in the U.S. last year, which led to, I would say, import hesitation of diamonds in the U.S., and the U.S. is the largest consumer of diamonds. So there's been multiple things happening at once that kind of led us to where we are today.
You mentioned there about weaker demand in China. Why was that?
So I think Chinese consumers tend to see fine jewelry as a store of value, and since diamond prices have been soft, I think it's turned off some Chinese consumers, especially as the gold price has spiked. And then I think there's also the macro issues in China and the cultural crackdown on conspicuous consumption. And we're seeing this across the whole luxury complex in China. It's not just diamonds.
So are diamonds not the status symbol that they once were?
Yeah, I guess I would just note that, we've had man-made gemstones for decades now. What's changed is how much prices of the manufactured diamond has essentially crashed in a relatively short period of time. I would estimate that lab-grown diamond prices have fallen 90% plus in just 5 years or so. There's no rarity component to this. It's a manufactured product. We can essentially make, as much as we want, whenever we want. And demand for this product has, I would say, inversely correlated with price. So as the price of these lab-grown diamonds has fallen, demand has picked up, and I think that's definitely impacted the natural diamond industry as well.
China is the biggest producer of lab-grown diamonds. How do you expect this industry to keep developing?
So to give you some context, China basically took over the market for industrial diamonds in the 1980s. So these are diamonds used for abrasive applications like construction or mining equipment. And China will produce 10 billion carats of those sorts of diamonds this year alone. And to give you context, we'll produce, say, 90 million carats of natural diamonds, and only maybe 40% of those will be good enough for jewelry. So it kind of shows you how much of the manufacture of the lab-grown diamonds we could make, and that's why I continue to expect to see the price to fall. And I think as the price falls, I think consumers are going to start to realize that natural diamonds are a different product. I think when you look at, just celebrities, engagement after engagement, the, celebrities tend to still want natural diamonds. I think wealthier consumers still want natural diamonds. So I think, as the dust settles with the novelty of this lab-grown diamond product, I think, consumers are going to want to come back and want the real thing. But we're certainly in a lull at the moment.
Paul, thank you. Paul Zimnisky, independent diamond analyst. Thanks for those insights. Back to you, Sally.
Thank you so much, Siobhan McCall. Your headlines once more. China's AI company Minimax sees its share price jump in Hong Kong after stock opens to mainland investors. The price of gold hits its highest level since June as a deal is proposed to reopen the Strait of Hormuz. And that's it for Global Business Europe. Thanks so much for watching. Up next is Africa Live. See you again tomorrow, same time, same place. From all of us here in London, goodbye.